Hello, this is the ChartProfit webcast, Friday 9th of October, about 3.5 hours into the trading day. Quick review of the pre-open. This is the E-mini S&P. As you know, the major support on the E-mini was 1865. Down the bottom here, we had a low, just a quick test, and then we came up prior to this. That's up here on the 1st of October. The E-mini and the Spider found support this week at the given point of control levels. So we covered last week in the webcast. And I said here, overnight enough time was spent at 1923 to migrate the 55-day point of control to that level. This is significant. So it was actually in here on the Wednesday overnight. I said the point of control emerging at 1923 makes sense. Suggests the distribution that began with the August sell-off may be near completion. E-mini may be ready to begin a new distribution, and price relative to that level, 1923 is now very significant to monitor. So it's significant buying marked above that level would be a positive and suggest higher. We had a little here, we had a full value area printed above that level with aggressive buying here. And we came up and approached the resistance here at 1971, which is the half range off the May high, this year's high. And Wednesday and Thursday this week we've had two value areas printed entirely above that level. And we've cleared that resistance in 1971, but I've said as long as the E-mini holds above 1923 down here, and that point of control does not migrate somewhere else, this is strong support, and as long as we hold that level, the E-mini is in a strong price location, even stronger above 1971 where we are now. This halfway point being support, we said look for intraday support. We saw that on the Wednesday, and actually overnight the E-mini came down to make exact low on that level, and we rallied from there, and again aggressive buying on the Thursday. Also made a point that the breadth numbers, as the percentage stocks greater than their 50-day moving average, have improved. For New York above 50 at 64, for the Nasdaq above 50 at 52, for the Russell 2000 above 50 at 59. These numbers are supportive, and that's the first time that's happened. Well, in fact, you can see in the ebook here we've just got above 50. First time that's happened since back over here in May. So both of these important indicators above their important levels, which are here and here, and those two combined give us this green color on the New York breadth on the pulse chart, again for the first time since over here in May. You can see on this chart actually that, well, let's say a number of positives. Mentioned the other day that the big time support down here, apart from this very brief test which probably lasted just minutes, 187, the time support was here. The following day we had exact support, and then we had really precise support there. And from there we've seen plenty of green on the chart, which is from the E-mini analysis. We've got green coming in here, and we have the price oscillator or momentum, although it hasn't turned positive yet. At least it's heading the right way. So this currently is a much better looking chart, and we're now above the halfway point and printing some green up here. The other kind of supportive factors are, for instance, here if we look at the Ridex, or my version of the Ridex assets ratio, market's rallying quite strongly here, and yet the ratio is very slow to respond, indicating that the public are not kind of buying this rally yet, which further indicates there's some fuel, what I call bear fuel, or fuel from the bears ready to come back into this market. So they could get squeezed if the market goes higher and the fear of missing out and all that stuff. If we look at the bear fund assets in Ridex that I follow, we've hit a 3-year high here, and there's not been much of a decline in this level in terms of assets in the bear funds. And you can think of this as a kind of fuel gauge for the market, so I will be monitoring this. Bull funds are climbing a little bit, but from a very low base now. I've seen quite an increase in bulls in the public poll. This is not what they're doing, this is what they're saying. In the public poll from AAII, there's quite a jump in bulls percentage this week, up at 37.5% from 28.1. So it's quite a jump. That's the highest bulls percentage since March. Bears percent fell sharply to 28.2 from 39.9. So the net this week, bulls minus bears in this poll, is 9.3, and that's the highest since June. Again, I follow the 4-week moving average in yellow here, and we're coming off a really low base for that. The first indication the public possibly getting too enthusiastic is to watch that 4-week moving average. That's the first level there from the previous high. But I think a better indication as far as sentiment goes is this one, the Investors Intelligence Poll, representing the view of newsletters and media. Bulls percentage slightly higher at 30.2. I say slightly, it was actually up from the previous week's 24.7. But that number was the lowest since December 2008. So again, a really low base. Bears percent was slightly lower, but we watch the net and we watch a 4-week moving average of net, which is this yellow line, and that's actually fallen down to minus a negative 4.7. That's the lowest since October 2011. So this kind of represents fuel as well. If you remember last week, the exposure index, which is the active money managers' current equity exposure, that fell last week. We had a reading of 16.39. That was the lowest since October. It didn't actually get as low as this. Anything below 30, I've just looked at the history, seems to be extremely low. So again, really low reading there, but we've jumped a bit this week. We're up at 38.3, so money managers are slowly coming back as the S&P rallies here. And then we've got the data from Lipper US fund flows. They reported equity fund, including ETF outflows, this week of $8 billion. Which you can see is this red histogram here over on the right inside here. I measured that over 4 weeks, gives us this yellow line, which is the 4-week flow, I call it. But most importantly, if we look 4 weeks ago at that 4-week flow number, it actually hit a negative 30 billion, and that was the lowest since February 2008. So at this point, sort of over here, this was an extreme reading in this indicator. So we have mentioned this over the last few weeks, that the sentiment has been heading extremes, and it's just to watch these. If the market rallies further, it's just to watch and gauge the enthusiasm. To my mind, it's of secondary importance, actually, the sentiment. The most important thing becomes important as long as we're holding the levels that I'm going to describe now. So we follow these in the pre-open each day, but this is the Dow Jones ETF, DIA, diamonds, and this, the halfway point, is the level to watch. I think I've been giving the precise levels in the pre-open each day, but we have now rallied on this large cap ETF above the September high, and in the longer term, as long as we hold this 164, which is the major time support, the major point of control, this is strong price location and even stronger above this halfway point. So diamonds in a strong location. We're getting a good end to the week, most likely. We've already seen the spider. We looked at this level here, this big support. So more or less a kind of, apart from this brief test, kind of like a double bottom on a point of control, which can be very bullish, like a double bottom on major support. And as long as we hold above this level here, which is the halfway point. Now, if the market's strong, I'd expect this to happen. So this is a good kind of gauge for us over the next few days. I might see a bit of weakness early in the week, which is quite normal in a bullish trend, but as long as we're holding this level, this halfway point around 198, it's still strong. This is the Qs. 105.10 is the major. Looks like we're going to end the week above that level. Again, this is a good one to watch going into next week. This is a big level and it's local. And once again, the Russell 2000 ETF, IWM, is going to become a really key chart for us, simply because 116 is the major point of control, that, and it's been that way for well over a year, probably a lot longer than that. 116 is the major level. We actually just probed here below the 12-month value area low, and that was rejected on the big distribution. So we're back here. Now this is resistance. So again, going into next week, I'd rather see obviously the Russell 2000 printing some time above that level, and the diamonds holding its halfway point, that kind of scenario. So it's good to follow multiple charts as we do, because these levels vary quite a bit, but as long as you can locate them and just see where these charts are printing relative to those levels, we get a good idea of overall market strength weakness. So the next positive would be this chart printing some time, preferably a higher low above that level. Just some international charts. This is the FTSE 100. Show it simply because from the high of the year down to the low of the year, here's the halfway point, we've reached it. I think the FTSE's been up 8 consecutive days, which is a hell of a run. Again, there might be a little natural resistance and a bit of a correction here, but if we could see this sort of price action above that level, this is powerful. Obviously we're at resistance, we haven't seen that yet, so this is a good chart to monitor as well. This is the average Dow in a year ending in 5, like 2015. 5 years, a very, very powerful year in the decennial cycle. This one has been so far the worst on record. We are, where are we? We're about here at the moment, into the month. And so you can see on average, we are entering quite a strong period. Let's hope it pans out that way. Just going to show this chart next. This is copper continuation futures from way back many years, and we showed this recently from this low here to the ultimate high. We're below the halfway point. This is really weak price location for copper in the longer term. But I zoom right in on just the last couple of months over here. So from this low, we're actually above the halfway off that low. We always measure that. So as long as we hold above this level going into next week, and I'll monitor it, copper's looking stronger in the short term, very weak in the long term. And as I've noted in the pre-open, that pattern here on USO, the oil fund ETF, this support here on the halfway, always measure this from a big low to the first swing high. There's the halfway, and we've said this is, again in the short term, strong looking chart as long as we hold above this level, which we monitor each day. Gold also above that halfway point, some oscillation here, but it's looking a bit stronger. So commodities, actually in the short term, there's a bit of strength. It's been oil that's caused a lot of the problems over the last few months. We're seeing the first minor sign of strength, so for the large cap stocks, obviously that's fairly supportive now. And just a quick look at T-bonds, ETF, this TLT. This is an area of support, as we pointed out last week. We were doing a little better up here last week. Ideally, we'd see a higher low above that level, but this support, if we break, we'll probably see it down here to test the major point of control. So again, it's a chart at a critical level. I want it to hold this, which is the 12-month and the halfway off the low here. And the resistance on the chart is from this high to this low. We get the halfway point in here. We briefly spiked above it on that highly volatile day back in August. Should we see T-bonds rally off this level, what would put it in a really powerful position would be that kind of price action. But going into next week, see price here, we'll probably see this tested. Okay, a couple of weeks ago, we'll finish with the dollar and the Forex charts. A couple of weeks ago, when we were kind of up here, we were talking about the possibility of a turn lower for the dollar. So subsequent to this low in August, and if we look at this high back here, but subsequent to this low, this level here came into play as the halfway point, and we've seen really obvious resistance at that level. And then the next level to watch is the 12-month level here, which is 95.22. We're actually printing below that. So the dollar is giving some indications now of weakness, and until we see price back above these levels, I'd say this is under threat, so we could see possibly this heading lower now. As I said, that if we saw evidence that the dollar was turning there, we'd see some of these charts moving into a stronger position. That's actually just about what we're seeing on the Euro FX chart here. So we're seeing the Euro above its 12-month point of control, only just at 113.40. The interesting thing, as I've been pointing out recently, is that from this major low to this high, again, we look at the halfway point, which comes in here, and that was the very obvious support. That's an indication of strength. So as long as we hold above that level, we're in a short-term strong price location. This would be weak down here, and if we can just build some time up here, that puts the chart in a stronger position. So we should see one way or the other how this works out early next week. But again, if this holds, it's evidence that maybe the dollar is weakening here. Really can't say that we see too much of that in the pound chart. This is the pound dollar chart, but at least we're holding currently this level, which is the halfway from that low to that high. The pound just has an awful lot of work to do. Just there's loads of resistance up here, as we've known from price action the second part of this year. This really big resistance level here, 156.30. Dollar yen from the high to the low, halfway point. Again, similar thing. If you look at the dollar index or the inverse of it, you can see something similar here. This obvious, again called natural resistance. So we're printing time in this consolidation here, but at least it's above the 12-month. We see price down here, we'll see a test of this, and price down there would be really weak because it would be below the major, which is here. This price action here, though, is the first sign of weakness. On the Aussie dollar chart, although it's not marked, did mention that down here at the low there was massive support going back many years. We looked at that a few weeks back, said we were looking for evidence that this would be a turn. I did say that we could maybe see a turn here at that level. We're seeing some strength coming in. We're breaking above the previous minor high, so we're just about seeing higher lows. But again, like the pound, there's big resistance above it here. But nevertheless, some signs there of a turn for the dollar. Just finish on this and just a brief summary. Spiders, much improvement here. Be good to see the price oscillator coming through into positive territory, which would be sort of trend up on the daily. We want to say this stay green. We want to see the spider and the diamonds holding their halfway points off the high going into next week, holding these levels here. And we want to see the Russell 2000 and maybe the FTSE 100, those key charts actually over the next few days, rather than finding resistance at their halfway points, which is where they've reached, or rather resistance at their chart levels as described that they've reached. You want to see them just pushing a little bit higher above that resistance. That would possibly confirm the strength that we're seeing. And we don't want to see too many bulls emerging in the sentiment too quickly, but we've had a pretty constructive week this week. Okay, that concludes, and once again I wish you a good weekend and thank you for watching.